All right, well, welcome to today's Monday morning mortgage update. I hope you all had a wonderful 4th of July. I know this is a big vacation season for Arizona to get out of this heat. Luckily for us, we do have the monsoons that finally have come upon us. So we got a little bit of rain yesterday. Hopefully, we'll get more rain as we go through the week. But rates, let's talk about those. Let's talk about what we can do to offer our customers lower rate options. And because as this war continues to drag on and it's just taking its toll on the markets. So let's jump right in. Today we're going to talk about a program, and I'm going to go into a little bit more detail on it because I had a lot of questions the last time we spoke about it. But it's called the My Community Rate Discount Program. And there's some identified properties within Arizona that do have rate discounts. I'm going to show you how big these discounts are as well. And then I'll show you how to locate these properties so you can show these to your buyers to help get lower rates for them. So let's jump in real fast and check to see what's happening with the actual interest rates. As you can see this last week, since we had the grass is greener, things were great, rainbows and unicorns when it came to the final treaty or the whatever you want to call it, the agreement with Iran to open the Strait of Hormuz. That all happened back on it was like 27th, 28th of June. And then on the 29th, they started bombing the plane or shooting missiles out the boats again. And then we saw rates get better. They were off to the races. They were showing signs of, I mean, we had a good run upward here on the mortgage-backed securities that were really helping us get rates lower. And then, unfortunately, um, Iran is not the most honest as far as, and who knows who we're really dealing with. But since then, we saw a sharp decline in mortgage-backed securities. We lost over 100 basis points in the last couple weeks, which basically a rate today that cost one discount point to get about a week and a half ago didn't cost anything to get. So it's about a half higher in interest rate or 3/8 higher in interest rate really since then. So not a great couple weeks. We had a couple days where we thought we'd come out of it, and then it just kept sliding southward. So not a good trend. However, I am a little bit optimistic. If you look at this chart below, this is the stochastic. This is the oversold or undersold barometer on how bonds are traded. And if you look on the 29th, we were oversold, and then now we're dumping off, and now we're undersold. So this should bounce upward based on the stochastic crossover that we could have soon here. So as you see, if it crosses over here, then it's usually a downward trend. But if it crosses over, it usually comes back up. And look how the mortgage rates follow the trend of buying and selling. So if we're down here, let's hope this week we can get a rebound up higher and stay off let's bounce off this big Fibonacci level right here. So bad couple weeks. Rates are higher by a quarter to 3/8 in rate. And it's not the greatest trend. Hopefully, the CPI numbers, the inflation numbers this week will bring us back upwards. But as you can see, we were locking almost every day the last couple weeks because of what was going on in Iran. Inflation numbers are still, we thought we'd be better because it stopped and inflation was going to be a talking point of the past, but that is not the case. So let's look to see what the 10-year is doing. It's actually a little bit more stable this last couple days. It's trying to bounce off this Fibonacci level, but today we're above this. So the 10-year, when the 10-year goes up, rates go up, and we're above this next Fibonacci level. This kind of scares me because if we end the day above this and we close above this Fibonacci level, we have a lot more room to go to the next one, which would not be good for mortgage rates. And it held a couple months ago, back in May, it did hold on that Fibonacci level, but we don't want to go there because if we go up there, then the 30-year will follow suit and we could lose more. So hopefully today we'll close underneath this Fibonacci level. But overall, rates are higher. We are in a negative rate trend currently. Right now, the 30 years in the mid to high sixes. Keep in mind, this is with the perfect borrower, 780 credit score, 30% down, primary residence, single family detached home. So if it's a condo or it's anything else, it will be higher than this. If they're putting less down or the credit score is lower, they will have a higher rate than this, or there may be points involved. You can always buy rates down. That's still a very hot topic. But 15-year, you're in the low sixes. 30-year on the jumbo, you're in the high sixes. You are in the low sixes if you have a good credit score doing an FHA loan or VA. And then the ARM products are in the low sixes as well. So there is some savings with the ARM products. We do have actually some really, really great ARM products in the fives still. So there are some options there, but you need more than 20% down to really get an ARM that makes sense. Here's what's going on this week. So today, really nothing. Not a lot going on. We have ADP numbers coming out preliminary tomorrow. We also have the CPI, the Consumer Price Index. This is going to be really interesting because it may come in low. We may get some really good readings on this because this is based on past inflation numbers. And we saw some, we saw rates get better. We saw gas prices come down. So all of that data is going to be part of this. So we may see inflation numbers come down lower. But because of this, we're still in that issue with Iran, they're probably going to overlook that, and we may continue to see rates get worse, even if the inflation numbers tomorrow are good or even. So we're going to keep an eye on that tomorrow, see how the markets react. Fed Chair Warsh is going to be talking tomorrow as well. Then on Wednesday, the PPI comes out, manufacturing comes out. These are more inflation numbers. And then Bank of Canada and then Fed Chair again in the morning, and they're going to be reviewing and disclosing the beige book, which is their notes. Then we have initial jobless claims and continued jobless claims on Thursday. Remember, keep in mind, if there's bad jobs numbers, that's good for mortgage rates. If it's really strong economy, strong jobs numbers, that's bad for mortgage rates. So we actually want weak numbers here to help bring mortgage rates back down. Then we have some housing starts, building permits, and everything showing on Friday. It'd be interesting to see what the builder sentiment is with those. So really, it's going to be a tough going this week. Let's hope we can rebound and not continue to slide because rates are higher than they were last week and doesn't show any sign other than that stochastic crossover that we could get. Let's just hope they hold. So I'm going to talk about the My Community Rate Discount Program. This is a little blurry. Not sure why that's so blurry, but that's okay. This is a great program. Again, buyers are very rate sensitive, so we want to do everything within our power to get our buyers the lowest rates possible. I'm going to show you how this program works. I'm going to show you where to go to find these properties. I'm going to show you the difference on apples to apples comparison on a conventional loan, a normal one, the rates on a normal conventional loan with 3% down versus this program with 3% down to show you how much of a drastic difference it is. So let's just jump right into it. This is the program. It has this cute little map that shows all of the properties available. Notice they're everywhere. This is just a little snapshot of Arizona's Maricopa County area, but I'm going to show you the actual map right now. I'm going to pull this over here onto my shared screen, and we're going to show you that it's all over Arizona. So if you go into this real fast, and you can go all the way into Prescott, we've got some up in the Prescott Valley area. We've got some in the Cordes Lakes, the Dewey Humboldt area. We're all the way up into Baghdad. Not much in the Flagstaff area, but there are some homes in the Flagstaff area too. So there are areas that all of the shaded areas have homes in them. And then when you scroll in on this, you will see all of the homes in a certain area. Notice in the Scottsdale area, there are some properties, even in Scottsdale, for this program. But there's quite a few homes in this program that are eligible for these massive discounts. And we'll go over how big those discounts are. I'm going to clear this boundary real fast so you can see where they're at. So here's Scottsdale. There's 284 there. Look at the Southeast Valley. There's quite a few down in here in the Phoenix area, the downtown Phoenix area, all the way up into Surprise, and there's Anthem area. There's 113 up here. So when you look at these properties, it'll give you the listing over here on the right-hand side. So if you choose the area, zoom in on it, you can see into the subdivisions. You can see which properties are actually eligible for this. And then you can just click on one and then look at this property. And then it says community lending area eligible. And then that program would be able to get the rate discounts. So great program. There's a map for it. I'll give you that link as well. But the interest rate differences is where it really comes in handy. So let's look at that real fast. And hold on one second. Let me expand this. Over here. Make sure I'm taking care of. If you have any questions, go ahead and jump into the notes section or raise your hand or just speak up. So as far as the rates go on this is where it's a pretty drastic difference because rate matters. On the left-hand side, again, total transparency, how rates work. On the left-hand side is this program that we have access to for the My Community. And on the right is the exact same scenario, but just with a standard conventional loan. These are flip-flopped. I apologize. On the right-hand side is the Chase Community Program. On the left-hand side is the normal. So if you look at 6.25 interest rate over here on the normal conventional loan, 6.25, there's a cost of 2 points to get that rate. If you go over to this option, there's only a cost of 0.196. So you're almost 2 full discount points better in pricing on this. If you look at 6.375 on the normal 30-year fixed, there's a 1.56 points to get that rate. On this program, the My Community, we're giving the borrower 0.312 discount points in lender credit at that same rate. So there's almost 2 discount points savings, or if you do an apples to apples, 6.99 rate over here is a slight lender credit. 6.375 is a slight lender credit. So you're a half better in rate on this program. That is significant. That is a massive change in payment. That is a massive change of mentality of borrowers. This program is absolutely fantastic if you fit within that map. That's the critical piece. You have to go into this map and you have to find the areas that your borrowers are in, that they're looking at, and then you need to dive in to see if they are in fact a home, a listing in that area that is part of this program. So there's a lot, there's quite a few, but it's not every home. So just wanted to make sure you knew how this works. I'm going to send everyone out a copy of the link to this program. This is actually, I'm going to tell you how this works. If you see up here, it says Chase Correspondent CPL Lookup Tool. Because we are partnered with an FDIC bank, Waterstone Bank, because we're also a mortgage broker and a mortgage banker, we're all three, a bank, a broker, and a banker. We have access to programs that others don't. So we have direct access to Chase's program. Having that FDIC has some good, really great perks, and this is one of those. So we can use Chase products. We don't have to go to Chase, which is a pain in the rear end. We can do that internally. But it is a fantastic program to get some really good discounts. So that's how that works. So yes, rates are better, and you can take advantage of that. If you have buyers, we definitely need to look at the map to make sure we have a property that falls under this. If you want to share with your customers the actual discounts on that, we can put that together and hopefully get our buyers a really great deal on a property. And keep in mind, if you look at these rates, you can buy your rate down to under 6% for only 1.7 discount points. Whereas it would have cost, here's the dollar amount. This is based on a $500,000 purchase. It would cost you $15,000 of seller credits to get a rate on a 5.99 rate on a conventional traditional. It'll cost you $15,000 in seller credits to ask for that. It's at three discount points. Or on this program, it's only $5,000. So a big difference in when your sellers aren't willing to give much, a big difference in cost there. So any questions on how this program works? Again, I'll send you the link so you can search these properties on your own. They're all of Arizona. So up in Prescott, in the Flagstaff area, down in Tucson, all the way across, even closer to like Blythe areas. There's places that are available. So have a look at that map, and then hopefully rates will continue to come down. And this program always has these big discounts, regardless of what rates are doing. So even when rates drop to a lower amount, this is an option for you to take advantage of. So if there's no questions, I'll stay on for a little while, but if there's no questions, then you guys can head off to your week and have a phenomenal week. If so, I'll stay on and I'll answer any questions you may have.
Sean, I have a question.
Absolutely.
What makes a property eligible for this program?
A crazy algorithm within Chase's system that puts it on that map. It's there's no rhyme or reason. I mean, you'll see some $1 million properties that are part of it. You'll see some that are $300,000 or $400,000 a part of it. There's no real rhyme or reason that I can tell. I'm sure if you really dug in deep and you asked the people that created this what it was, they'd share it with you, but that information is not privy to me, unfortunately.
Understood. And is there a time frame that they add more properties to it that we should follow, or is it just
No, it's just as listings come on, if they fit that algorithm, they'll present those to, um, they will put them on the map. So there's no timelines on anything. It's just a generic, hold on when I close this out. It's just a generic program that as listings hit, if it hits their algorithm, they get applied. So I would look on it every day if you want to. There's no reason not to. Or anytime you have buyers, you don't have to look at it every day, but every time you have a buyer, if you have a listing that's on here, you may not know about it. So check your listings as well, because you could have a listing that has these discounts and you can advertise that. So definitely cross-reference your listings to this map, and I'll email you that map so you have the link. It's a really, 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 really long link. So keep that as a favorite, put that onto your favorites on your browser, but it is a great tool.
Can't wait to see it. Thanks so much, Sean.
Yeah, you are very welcome. Happy Monday, everybody. Try to stay cool out there. If you're still traveling around, enjoy your vacations and the cooler temperatures elsewhere. And if you do have any questions, I'm always here to help. Have a wonderful day, guys, and happy summer in July. Talk to you guys soon.
thanks, Sean?